Gotta let everybody file in. Hi, everyone who's joined us already. I can see a lot of participants are still filing in or entering the door, whatever you want to call it, when we're on these webinars. So I'm going to just wait until that number gets a little bit stable, and then we will get started. Okay, it's slowing down. All right, panelists, friends, let's get going. Well, I guess it's probably good afternoon for most of you. It's definitely good afternoon here in sunny Des Moines, Iowa. I am Laird Nossuli, and I'm the CEO of iEmergent. And today we are going to talk about opportunity. Now, technically, the name of this webinar is very long. It's not sold on diversity. Fine, let's talk about your bottom line. But that's just a really long way of saying, let's talk about opportunity. Let's talk about all of the opportunities that we have as practitioners, as homeowners for communities, despite everything that's happened in the last, I guess, 3 to 6 months. Let's talk about where things are headed for the future. And again, we have still some people filing in, so I'm going to let them keep coming. But I'm going to give my wonderful panelists the opportunity to introduce themselves. But let me just say ahead of time, these 6 people are probably 6 of the most well-known, amazing practitioners in this area. And I asked them to come on because they really have a way of lifting me up. And as we get started with this, I think you're going to hear that this is not just about opportunity, but this is going to be a webinar about the future and about hope. And we'll get more into that as we go. But before they introduce themselves, I'm going to lay a few ground rules. I know that Megan from my team is going to be monitoring the chat. So I encourage all of you to join in, have conversations. I also encourage you to put questions in the Q&A. She'll let me know if it's something we need to answer during our discussion. Otherwise, we will wait until the end. And although it is slated for 2 hours, we probably won't go the full 2 hours. Just wanted to let us do it if we wanted to. But I really hope at the end we can have an active discussion with you about the challenges you're seeing, any questions you have about the things we talk about, because I can tell you it's very, very rare that you get 6 experts like this in a room ready to talk to you. So without further ado, I would love if you guys introduce yourselves. Nikki, why don't you start? But I'd like you to say who you are, what you do, and a little bit of description, and then tell us where you're calling in from.
Where I'm at. Okay. I love it, Laird. Great opening. Anytime that you ask me to talk about the future and opportunity, I am here. So everybody, Nikki Bialka, I lead affordable housing and equitable lending efforts at Fifth Third Bank. I have been in the industry for 16 plus roles and served in various capacities, from operations to optimization work, customer journey. And I've been in this role for about 3.5 years now. I live in Cincinnati, Ohio, and I have an 11-year-old son named Julio. With that, I think I'm going to hand it to Gabe.
Hi, folks. Gabe Ewing Del Rio. I'm calling in from Maine. I used to be just south of DC, but I'm in Maine these days with my twin kiddos. I run an organization called Homeownership Council of America, or HCA. And we're kind of a weird nonprofit in that we serve our mission through our lending partners. So you'll hear a little bit more about that today. Had a lot to do with the SPCP work that has happened, but is also by and large ending, and we'll talk more about that later. I guess I'll pass it off to John.
My name's John Harpst. I'm the Vice President of Community Lending at Lake Michigan Credit Union. Lake Michigan Credit Union is the largest credit union in the state of Michigan, 14th largest in the U.S. We have approximately 66 branches in Michigan and in Florida. So happy to be here and looking forward to it. Toss it up to Tate.
My name is Tate Toliver. I'm the VP Market Leader here at Cardinal Financial. I have been in the mortgage business a little over 20 years now. I manage a team of loan officers and branch managers from coast to coast. And this space of opportunity and diversity is something that is very near and dear to my heart and wanting to help more families obtain home ownership. So I'm looking forward to the conversation. I will pass the mic to Thomas.
Hey everybody, I'm Tom Sullivan. I'm the mortgage banking executive at First Commonwealth Bank. I am in Pittsburgh, Pennsylvania today. We're an $11 billion community bank headquartered in Indiana, Pennsylvania. A fun fact for all of you is 43% of our production last year was actually from the CRA and LMI space. So we live the mission every day. Pass it along. Next guy down.
Hey guys, good afternoon. Tony Thompson with NAMMBA. Excited to be on our call today. Greetings from Starbucks in Charlotte, North Carolina. In the CLT, just landed from Dallas, Texas. So I'm excited. I got my Java. Laird, let's do this.
All right. And Tony, we need to have like a where in the world is Tony Thompson competition at all of these. You're always calling from somewhere else. Well, before we dig in, we're going to talk about, I might as well just go to the next page. We're going to, go to our little why now. You guys, a lot of you probably have heard me talk before, and in a way you're going to be hearing the same things you always have heard, right? We're going to talk about why now. We're going to talk about opportunities. We're going to quantify some numbers. We're going to talk about, how things are sort of a lot of different trends are emerging and converging. But really, what I want to say about now is that there's been a lot of things that have changed our landscape. And as we go through this deck, I don't think it's ever mattered as much now. I don't think it's ever mattered as much as it does now. Because when we start talking about risk, this risk is going to sound different. When we start talking about some of the barriers and challenges, we have new ones. And for the first time ever, I was preparing for one of these webinars and I was quite frankly a little negative. Wanting to spend a lot of time talking about what's happened and all the things that it's doing and how is this hurting all of our organizations. And these panelists quickly took me right out of that and they kicked my own words back to me and said, you know what, this isn't the time for this. So we're not going to spend a lot of time today talking about what's happened and how the landscape has changed. I touch on a few little things, partly because we have one extra room here that I want to help clarify one of the really definitive pieces of change that we're dealing with. But really, opportunity is about the future. Opportunity is about hope. And even though, there is a lot to talk about in terms of the specifics of, what's happened from including, unless I might as well just list some of them, what's happened at the CFPB, I guess I'm going to call it hostile takeover at Fannie and Freddie, just an overall sense of disdain and I mean, an actual, not just sense of disdain, but what I feel like is an assault on what we have always called diversity, equity, inclusion initiatives. Inclusion initiatives is good enough for me, but I feel like there's assault on that. And then obviously the last piece, and it really has been for the last 2 years an incredibly important part of our toolkit as practitioners, and that's some of the new words and really declarations around the special purpose credit programs. And so I would actually love to start with that. And Gabe, for a lot of us, you can read the directive and it's 1 page long. What does it mean for our industry with all of the new discussion and I don't even want to call them rules. Tell us what's in the store for the future of special purpose credit programs.
So everyone saw the cancellation of the pilot programs and the GSE support for SPCPs. But I think that's really just kind of the first chip to fall in the overall executive order of removing DE&I, as you've just referenced, Laird, basically from anything that's federally supported. So not only are we seeing that the GSEs don't have specific variances for SPCPs, but the federal regulators are, we'll see if they, dial anything back that they have literally said, in the positive in previous years. But at minimum, there is a dialing back of the direct or overt support of anything that is DE&I based, which would include SPCPs because they are things that are based on race. And whether that program is a people-based program or a geography-based program, in the SPCP world, that's still all related down to people, and it's still all related down to race at some level. And so that whole line of thinking essentially is not being supported at minimum. And it doesn't change the law. It doesn't change ECOA. And, you're welcome to check in with your in-house counsel and specialty counsel on that. But it absolutely changes the way that people are treating things. And so even for, just a federally regulated bank, for instance, that not only doesn't have access to the GSE programs to sell or to get specific variances for LLPAs related to SPCPs, but you've also see those banks removing the language that relates their programs, whether they still are an SPCP focused type of product. The focus is being removed from MMCT or anything race-based. We didn't really see many people-based programs to begin with. But that's sort of what's happening in the market today. And what I think we can expect is for a complete dial back for anything that is race related being supported at the federal level. And so in this world and in this work, we have to zoom out and think about things from an affordability perspective and from a market perspective. And so what's affordable for home buyers in every market, for all home buyers, and that includes underserved communities. But we can't use the same language. That's the other thing that's happening is that, we're included in this even the changes happening with language around what word can be used to describe programs. And so that is all shifting. And I think, as we're talking about opportunity to try and end on something positive, the zooming out, which is what, I think we're having to do here, and still looking at the mission and filling the gaps for everyone, means also some innovation. But it means that, unfortunately, the tools that we, for one, and many others, worked really hard to implement and have available for the industry over the past few years have changed. And so we've got to think about what are the tools that we can use and what are the words and the focus areas that are safe in this environment, but still get at the populations where the opportunity lies.
Well, and that's why I wanted you to talk about that, Gabe, because I think that, your overall reflections on the SPCP policy do kind of give an insight into how things are headed. And again, when we're gonna talk about the stuff that changes the landscape for a minute, but then we're really gonna move into solutions. So with the next question, I'm gonna ask a couple of you. We don't really have to get into any solutions yet, but I'm curious about, just again, how has this impacted your work at your organizations? And, nothing specific, but in general, I'll start with you, Nikki. How do these shifts change for the landscape, for professionals and institutions, across the industry, like in general?
Yeah, I think, thank you for that, Laird. I think, one thing that we're used to in the mortgage industry, if you've been in it for a while, is change and fluctuation. But I think the rate of change and how quickly things are happening and the way in which things are being communicated, for us, it was really important on how do we quickly digest and understand what that change is, so that we can administer the change, but most importantly, get to our teams. Make sure that our teams can explain what any of these changes mean to our clients. And so, there's a lot of uncertainty with clients right now as well. It's not just, and from a client and community perspective, it's different, right? It might not be SPCP, that might not be their lingo. It might be tariffs. It might be all these things and these distractions that are happening, and they hear things are happening in mortgage land. So I think number one, it's how do you quickly align on what this change actually means for your organization, clarify it to your teams and communicate it and continue to drive that communication. But most importantly, it's not just this program is gone. It's this program is gone, but these programs are still here. And these programs have always worked. And while special purpose credit program might have made things a little bit easier from certain abilities to really pinpoint where we were trying to go, these programs still work. So focusing them on HFAs or the down payment assistance programs that are out there that might be more nuanced, but those are the things that we really need to fill the gaps for our clients. And then I think the other thing that we've been really focused on and aware of is how all of the impacts are affecting our community partners. So while it might not be the GSEs or the CFPB or some of the changes that we're experiencing on the lending side, there are a lot of changes that are happening to funding sources and programs, and this whole mentality of how do we fill the gaps for our clients who are facing uncertainty? How do we fill the gaps and support our partners that we work alongside of that are experiencing challenges? And then I think the last thing is we have to know that our colleagues are going through an experience right now as well. They're having to navigate this change. So checking in on them and making sure that they really understand what this means and that we're committed to the work. Words might change and we might have to pivot, but we're still committed to this work has been really our messaging.
I think, obviously when I had the privilege of being alongside Nikki and the entire Fifth Third team, it was an egg hunt, cracking the egg of Homeownership open. It was a fantastic event in Columbus. And I will comment that Mr. Sullivan's team was there as well, as were the Huntington and U.S. Union Home Savings and Park National banks were all there as well. And what made me excited about that, in lieu of all of this, we even had some Fannie Mae, veterans there fighting through it and providing the same exact wonderful information they always do. But it was really interesting to hear on one side all of the things that were going wrong, and it's like this buzz of concern, and yet see practitioners in the field doing what it is we do. We didn't have to use any of those words. We thought we were focused on the activities. So this, in practice, what Nikki is saying is right. And what I like about this approach that you're all bringing to the table is that you're basically saying, you know what, we can have different challenges thrown our way. We're going to find a way around, because that's what you do when you care about something. Switching gears for a second, because I have seen personally, responses vary from type of lender, with different types of lenders, right? I mean, I work so much with the depositories, big and small. And I had another privilege of being with a lot of the credit unions at a CU Realm credit union event that MGIC put on in San Diego last week. And credit unions I'm really starting to appreciate their member base, community-driven philosophy. So I'm curious, John, if you feel like, because you have a little bit of a different look at this, how has this impacted the way you're thinking about your business at LMCU?
Yeah, we had a very successful SPCP that we rolled out in September of last year that had a race and ethnicity component in the qualification of it. And unfortunately, we had to change some of the wording. We still have our down payment assistance grant, and it's still available, but unfortunately, we had to remove some of those components. And it still is successful. It still is, our outreach is still there. We're still targeting, the communities that we want to impact. So, and thank you, Nikki. I'm going to give you the footnote for this one. Just because we changed the words on our SPCP doesn't mean we changed our mission. So that couldn't be more true. Our leadership and our board are very committed to outreach to the first-time homebuyer community, regardless of what the environment is right now. We, as a credit union, although we're not CRA kind of oversight, we are fair lending and we are fair housing, and and quite honestly, it's the right thing to do. And that's how we've kind of gone about it. And again, we were disappointed because that was kind of a very successful, but our mission and the individuals that have that outreach component of this grant, this down payment assistance, we're still making an impact, and we're still making it happen. So although that there's some other groups that are benefiting as well, we look at it as, hey, we're still helping anyone that needs the help too, regardless of their race or ethnicity. So we're steaming forward with it. It was disappointing, but onward and upward.
Right, that's exactly what I'm hearing from all of you. I have seen the most. Again, it's different for independent mortgage banks because they have a different products at a different way of they don't have other products like the depositories do. They don't have a member base. Tay, tell me what it's like in your world.
On the independent side, every single customer that comes in on our desk, we're trying to help. So we don't have the scrutiny or the regulations from CRA or any of that as some of the banks do in the very beginning. So when my loan officers are talking to people, their entire intentions always are to go out and help everyone that they can speak with. So then that mission is always there. You're wanting to help everyone. So you don't necessarily need special programs in place to do that. Now, obviously, once you start pulling credit profiles and start seeing customers' information, you have to find a way to make that happen for them. And that's where being on this independent side really is our advantage. We have the products out there to help any and everyone that comes across our desk. Now, obviously, me being a Black man in America, I want to help more folks that look like me get into homes because that is the demographic that owns fewer homes in the United States right now. So I'm going to preach it to the back of the church every day about helping people get into homes. But as a whole of the industry, you got to help everyone. And there's just so many people out there that don't know how to help. So then they don't do anything. And then you run into a situation like now, we shouldn't be panicking. There's still a million other products out there that are available for people to get into homes. And that's really what we push at on the independent side, regardless of if it's something government funded or not.
Right, and that makes a lot of sense. And certainly, again, we're getting to the sort of end of here's what it's like now, here's what we're worrying about phase of this, and we're going to jump into the opportunity and the solutions. But before I do that, Tony, Gabe, and Tom, I've got some questions for you coming up. But Tony and Gabe, do you guys have any thoughts on it from outside? I mean, for me, I talk and see so many different lenders. What are you guys seeing?
Well, I'll tell you, we have our equity certification or certification for lenders, which was made for SPCPs. That entire program is going to pivot. And so and that will, we'll still have that for those who have it, but we'll zoom out to include all affordable programs, and we'll start grading through that certification, sort of, platinum, gold, silver, etc. Different types of provisions that various different lenders have, so that that can be a consumer guide. So, that's a project that we've been working on, that we put a lot of resource into, frankly, and the whole thing has to, rebrand, different word, different logo. We're not canning altogether what we've done, but that's a big change for us.
Yeah.
And the advisory council and the OCC Reach group, all of that is, sort of changing. But I think there's still value in doing that work, and there really isn't anything out there to help tell consumers they're safe and that they found a good lender. And that exists almost in every other industry. So we're going to keep pursuing it, but it's a big change that I couldn't tell you what it'll be called right now.
And we're
Certification.
learning that calling things something isn't always in our best interest, right? If we start putting names on activities and names on approaches to things, it can kind of sometimes pigeonhole them a bit. So, Tony, anything else for you before we jump into sort of the opportunity and the path forward?
Yeah, Laird, I think for me, what we're seeing, we had a town hall yesterday at NAMMBA, and we talked about three major topics, but one is really around regulation on the regulatory side. And I'll break it down. What we're seeing on the community bank side is a lot of our community banks are recognizing this is a great opportunity right now for them to really increase their outreach and their engagement strategies to actually do business in what we call the multicultural market. Also, when you think about credit unions, you mentioned earlier, I see a huge opportunity for a lot of credit unions to step in and leverage and capitalize on the financial wellness and financial education that they're already doing or have a passion for doing, and really using this as a moment to go deeper into those multicultural markets. What we have seen on the community bank side, however you look at, I would say some of the recent changes and policy shifts by the current administration, if you're a bank, you still have to follow, and you have red line, you got fair lending, you got to follow certain rules that no matter what you do, will still require you to serve this market. But from an independent standpoint, we have seen a lot of the IMBs take a step back and say, well, we don't think this has to be, or maybe this is not a focus area of ours moving forward. And they've, went to certain amounts where they've even reduced their compliance teams or reduced their, what we call community lending, quote unquote, teams as well. And at the end of the day, what I remind lenders, whether you're an IMB, a bank, or a credit union, is that the growth market is the multicultural market. So whether you have the current administration saying that we're going to look at and approach this differently, it doesn't negate that a large significant part of any lender's business over the next 3 to 5 years will come from communities of color. And if they are not putting together a playbook and a strategy to serve those consumers, then I would say that they will be getting out of the industry over that same period of time.
Or they'll be kind of forced out of the industry.
Drink at minimum.
Right. So a couple of the things we were going to talk about, Tom, you had a fantastic set of answers for me, and you started at least 3 of the answers with four words. And I'd like you to give me those 4 words so that we can go to the next part of this. Is the perfect segue. Tom, you know what words I'm talking about, right? What is your response to these things?
Yeah, we live in the data. We live in the data, and we really just focus on driving what that tells us. We see where the glaring needs are. We devise a strategy, and that's whether it's marketing, product, presence, or all of the above. We find a way to really differentiate ourselves and help in those markets. You know, I mentioned that 43% number that I had said about what we maintained and attained last year in our unit production. And why that's so important is because when you look at that data and then you also look at where you need to fill gaps, that's how you can tell the story to your team too, that this needs to be a collaborative effort. And when you have the buy-in from the team, and you can say that 43% of our loans were booked because we became subject matter experts on the saleable business, on our portfolio, and helped our communities, then you have the entire team rowing in the same direction. And then what happens in the future? You know, people complain or say it's not profitable. There could be, you know, delinquencies and whatnot. But I can tell you right now, this has given us such an expansive amount of relationships earned in the real estate community by being the lender that stood up in the tough times and found ways to connect grants, provide programs, and do those things. And we did it segmented based upon what we looked at in the data. And then you pass on the data to your team, and they start to understand what they're doing and their impact. And then it just becomes a contagious approach and has really helped us really drive forward and be successful.
And that's why I love, that's why, you know, my role in this is getting you guys the data you need, putting it together in a way that allows you to consume it. But the best part of it is watching you, working with you to come up with strategies that do exactly that, right? And again, I know I looked at the list of who's on listening to us today, and you're going to have seen these next 4 slides 1,000 times. I will never stop showing these next 4 slides because they are critical to what we're talking about, okay? And this one, I'm not even going to go into the little details. You're going to see with what I show you that tomorrow's opportunities are different than today's. And there's a little yellow quote on almost every one of these slides moving forward. And I think it's really important to think about planning today for what you want to do tomorrow, right? And so think about that. If you're thinking about where you want to go, and there's going to be lots of reasons why you have to do that, why aren't you thinking about it today? Because look at how much things have changed in the last 2 months, 3 months, 6 months. I mean, we had this redlining roundtable in November, and our conversation was almost entirely different about what risk meant, right? Before we talked about risk, it was, hey, you might have some compliance risk. Now it's flipped. One of the risks we're talking about is that there is now a risk doing the things that we were doing before to not have a problem with the other kind of risk. That's complicated, right? But these numbers aren't changing. And whether it doesn't matter who's in office, the reality is change marches on. Nothing anyone's going to do is going to slow down the demographic march. Our world is changing. The face of the American home buyer pool. And what I mean by that is the households that are ready, willing, and able to buy a home doesn't look like it did last year. Doesn't look like it did 5 years ago for sure. And what it looks like now is not what it's going to look like in the next couple of years. And that's one of the reasons that we have been so focused on our forecast. And it's one of the reasons why every time we're talking about these different strategies that we're going to do, like the actual tactics and strategies, you always have to think about those strategies in the context of where things are headed. And really, uncertainty is our certainty, right? I love this, and this doesn't look like anything right now, so just look at that. But does that look like stability to you? It's not. This is why you can't look at what happened yesterday to look and see what's going to happen next year. Each one of those bar charts, or little bars on this chart, reflects the year-over-year change that happened in total originations. Well, I think that tells a pretty good volatile story. And if we added on to this, and we had a chart that showed the profitability of lenders, it looked kind of like this. And the reality is we should see originations and revenue shift, but we shouldn't see that shift in productivity or profitability. And the reason we see that is the same reason that we have the next chart that you're going to see in a minute, and that's the homeownership rate gap. They didn't cause each other, but the solution for those two things is the same. Okay. And what I'm really talking about, I'm going to skip that one and go right to my favorite one. This is tomorrow's best path to growth. I know that we have to go places in that we can talk about growth without talking about race and ethnicity. We can. But the reality is that if you look at growth and you look at millennials and you look at first-time home buyers and you look at what's happening in this world where in the next 5 years, and I had that statistic on the other chart, of the 8.5 million new net households, only 455,000 of those will be non-Hispanic white. And I can tell you, yesterday I was looking at an analysis of both Baltimore and Atlanta. And one of the things I look at is the penetration rate. So what percent of total loans, does a particular group, comprise? And in both of those markets, the penetration rate for Black borrowers or Black applicants went up 10 percentage points. It was the only one from 2020 to 2025, the biggest gain, despite a homeownership gap, right? And if you look at what does the next couple generations look like, they don't look like the old generations. They don't care about the same things the old generations do. In fact, they care a lot about how much we're paying attention to difference and how much we're valuing diversity. But nonetheless, this chart basically shows, I guess it's 30 of the largest markets in our country. And there's a blue line that you can see really easily, and there's a red line. That blue line really shouldn't be a line, but the dots are what's important. The dots on there reflect the home ownership rate for non-Hispanic whites in any one of these markets. And so just to pick one out, Memphis, the home ownership rate for non-Hispanic whites is like 77%, okay? The red line down here represents the home ownership rate gap for, look, BIPOC, minority, people of color, however you want to define underrepresented people, that is represented by those red dots. And if we look at Memphis there, that number is just below 50. So think about that. That is a 29.2 percentage point gap. The widest one we're looking at of all, because this brown line is the homeownership rate for Black households, the green is Asian, and the pink is Hispanic. And you see there's a lot of volatility, but the widest gap of these markets is in Minneapolis. And that is a 50.1 percentage point gap. That's enormous. And I can go through Pittsburgh, Charlotte. The smallest is actually San Francisco. And that's partly because the San Francisco homeownership rate for everybody is low. But there's another way to look at these different lines. They are lines that talk about inequity. But those lines, those are your best path to growth. That is opportunity. These are purchase dollars. They have to look at it that way because that's the reality of what this is. And so when we're thinking about, the reason I skipped over these charts, this is our forecast. When we think about these markets where this is green right here, green is purchase, where we're just seeing a little bit of incremental growth, imagine what that could look like if we start closing that home ownership gap. And what does that actually look like? So that chart that I showed you is the gap. And basically, there's opportunity everywhere, and that's why I love this. Wherever there is change, wherever there is uncertainty, there's opportunity. And what this table here shows is it takes that number, or that chart that you saw, and it quantifies what those homeownership rates look like and how those homeownership rates look like compared to, like mortgage production. And what this is saying is that in the next 5 years, because, again, we forecast, so we're looking at 2025 to 2029. These are the forecasts for the non-white Hispanic lending, so BIPOC and multicultural lending. And what this is actually showing you that if nothing changes, just because of that change in demographics, we're looking at $2.6 trillion, 32% of all purchase dollars are going to be to these households. You know, and that's Asian, Black, Hispanic, you know, Pacific Islander, Native Hawaiian, American Indian, Native Alaskan, and the combination of anyone. So that's a lot, 32% of total. Think about that. If you couldn't work with 32% of any of your market, you wouldn't have a very high likelihood of being a market leader. That's just the truth. But the reality is that is one future. That's the future of no change. You know, I like to talk about the tale of two futures. One is what happens if we do things the way we've always done them, and what happens if we start to make some changes. But we're going to talk a little bit about what that looks like. And one of the challenges to that before we get into that shift is that opportunity that we're looking at here, if you go back here, each one of these markets looks really different. Like you look at Dallas here, Dallas is primarily driven by the Asian and Black percentages, a little bit by Hispanic, but not as much as you would think. You know, where the yellow shows where that particular market is one of the top 10. And so you can see that if you're going to be thinking about improving your lending to, you know, BIPOC households, it's going to look different in Atlanta. It's going to look different in Chicago and in San Diego and in Portland, Seattle. But what's really interesting and what we're going to get down into, it doesn't just stop there. It looks different within those markets. You know, there's a certain neighborhood here that might have a Laotian population that has a lot of opportunity. Over here, you have a Black, you know, a neighborhood that's been historically Black and foundational Black. It'll be different. And that's where the challenge lies. And so because of that, we've really been thinking a lot about how do we shift? And I used to call this the new paradigm. And I realized that that's kind of one of those words, paradigm. What does that even mean? Well, Tony did a really great job when I've been working on some of his webinars. And he always said, guys, it's time to move away from the old school. We got to start looking at things differently. And it's never been as important as it is now. And when, you know, I've been listening to John talk about some of the strategies they put in place, and Nikki and Tay and Tom, all of the things that they are doing that are working are moving from the old way to the new way. So remember that old way, 2.6 trillion. And before I get into what that new way looks like, that new future, that other option, 4.0 trillion. And that's if we only make a minimal change in that home ownership gap. We're looking at it going from 32% of your purchase dollars to 43% of your purchase dollars. This is where we're talking about the bottom line. This is where it matters. And so what does that mean? How can we change? Well, you know, the primary driver historically has been about risk. You know, back in the day, people worked and institutions did work for underrepresented households because they had to, because there was a compliance risk. Now we can add in social risk, we can add in reputation risk. But the strangeness of this is now we have this new type of risk, which is saying, hey, if you focus on those things, it's a risk to you. So let's throw that out. Let's not look at that. Let's start talking about the opportunities. Let's do, you know, let's go where the business decision is pushing us. And that comes from that forward-looking approach to opportunity. You know, one of the things that goes along with that is we, as an industry, we're more reactive to change than many. You know, what happens when we have a refi boom? Oh, we hire up a ton. And what happens when it crashes? We fire a ton. We wait for the hum to data. And then we're wondering, can we sleep at night? Now, how are we going to look compared to our peers, compared to the market? Well, I'm here to tell you, we can't keep doing that. We have to be thinking proactively because of the change I was talking about. What it looked like yesterday isn't going to be what it is tomorrow. That chart with all that volatility, if you're waiting to see what happens, instead of thinking about what might happen and start your planning, you're going to miss out. Diversity, right? So in the past, we've talked a lot about, you know, where has diversity fallen, right? And this is where what happens is now actually going to promote the path ahead. We used to have programs focused on DEI, programs focused on multicultural, minority lending, emerging markets, whatever you want to call it. They had their own places. what if we stop thinking of it that way? And when we think about that opportunity, we realize that those groups, they're central. They should be central to all of the strategies, central to an organization's human resources, central to sales, marketing, operations, all of it. Because it's a part of where this community is headed. And sort of, so those are kind of like the principles of, how do we think about it? But in action, we've been struggling with generic strategies and you're going to hear now why we can't have the same strategy everywhere and for every group. We can't do that anymore because there's too many differences. Well, how will we use data? We've used static data. We're going to start talking about dynamic data. And instead of having this, one-way communication where, hey, whether it's with data, I read the data, I do the thing. Okay, I have a community needs assessment, I read it, I put it on a shelf, I do my thing. That's not going to work anymore. We have to start looking at a new way of doing things. We have to start thinking about collaboration with other lenders, collaboration with your customers, collaboration between compliance and sales and executives and operations in your institutions, and collaboration from nonprofits to government to private industry. Without all of that, none of this is going to work, because the reality of all of this is that complex problems have complex solutions. And if we don't change these strategies, we're not going to change the results we're seeing. And there's a huge business loss to that. And there's also, if you think about the risk, there's a huge humanitarian loss to that, community health loss to that. But one of the things that's the hardest, and again, we're going to talk about this in a little bit, is that this approach requires that we run a sprint and a marathon at the same time. And part of that is because when we look at that home ownership gap, there are 15.1 million mortgage-ready households. People that right now could, if they either knew or had the right, direction, they're ready to have a mortgage. They're ready to, to take out a mortgage. They're ready to be homeowners. And then there's 5.2 million that are near mortgage ready. Well, they're maybe, they're close. They might be ready if we redefine what it means to be mortgage ready. And that's where we're going to start talking about some program ideas. And then there's the long term. How do we cultivate mortgage readiness for that 15.7 million not yet mortgage ready? This is where we're going to start talking about a philosophy that, all of the lenders on this table will talk about, and that's, you don't say no to somebody, you say not yet. And then you help them think about where they're headed. And what's challenging about this is if you're trying to keep a team moving forward and you're trying to decide whether your strategies are working, it's really hard to be thinking about the short, the intermediate, and the long term at the same time. That is also complex. And so because of that sprint and a marathon idea, that's the importance of dynamic data. And at the credit union conference I gave, we're pulling together a lot of these quotes. And this was Bernard's favorite. He said, that's the one everyone's going to like best. And I was like, no, that one's not that, it's not that sensitive. It's not that, hit at your heartstrings, but it's not data. You're just another person with an opinion. That was everyone's favorite quote. So thinking about that means when we're talking about dynamic data, how are you using it? Well, you're using it to identify who, where's that opportunity? You use it to build. What are we going to do? When are we going to do it? What are our goals going to be? We use it to execute. And that's where we have a lot of data on execution right now. Everyone uses data to execute. They want to know, okay, who are the top loan officers? Who are the top real estate agents? We have that data with what we provide. But you know what? That data by itself, if you're not thinking about who, where, what, and when, and how well and why, and the context, it really doesn't have a lot of meaning. It doesn't work the same way. And last but not least, and this is where I love special purpose credit programs for this one piece, especially, they made us start thinking about the importance of evaluating what we're doing to see how well they're working and why. So, transforming data into action. This is where this conversation is going to go from now. But what I can tell you is that without strategy, execution is aimless. And without execution, strategy is absolutely useless. And so we've come up with this way, and we meaning, I guess we iEmergent, but we, along with all these lenders that we work with, there is a way to do it by starting macro, looking at opportunity, seeing who it's with, where is it, how much, comparing yourself. We're going to talk a little bit about gaps in coverage, setting priorities, and then the part that's the easiest really is really into focus. Lending is local and acting. That is the context I want you to think about when we move forward and we stop listening to me talk and we hear these experts really talk to us about what they're doing. So knowing the data is one thing, using it is another. I don't know who I'm going to start with here. Let's start with pay. Hearing all of that, knowing that this data is out there, why do you think more lenders aren't taking a forward-looking approach and thinking about all of the opportunity that's in front of them? What do you think is the pushback?
I don't really think it's a pushback. I think if you really look at it, a lot of the lenders out there aren't mirroring the communities, right? So you have a bunch of lenders who are your middle-aged white people that are not involved in some of these communities on a day-to-day. Now, the community lending aspects of a lot of the banks, it forced that activity. It allowed those banks to be a part of it. And like some of the folks that are here on this panel, now they have an in. Now they're involved in some of these organizations where at one time it wasn't that way. On the independent side, though, we recruit and we handpick the people that we bring into our organization. So we only are bringing in people that fit our culture, which are people that are involved in all of these things that we're discussing today. So I think that's part of some of the things that have happened over the past. I've been in that community lending world where we were handing out the checks, but a lot of the stuff that you talked about earlier, it was checking the box for the activity for the CRA, not necessarily the impact in some of the neighborhoods and the communities that's the most important side of it. Now, when you start looking at, and I know Tony does a lot of this too, in helping lenders and banks out there recruit to these segments, but recruiting to community lending and recruiting to help more folks of color own homes, you don't have to look like it. You have to be wanting and willing to do the work. You have to be willing to be the only person in the room and helping more families that do not look like you. And I think that's where the gap has been over time. I'm always empowering more folks to get into this business and helping folks. It's not easy though. I mean, you can see it, you see the numbers, how many folks that we've had that did not renew their mortgage license in the past 24 months. The business is hard. You saw the chart. The business was down for the last 2 years. Now we're finally starting to see an uptick in originations again. So it's something that I feel like it has to be a priority for any institution if you're wanting to really be intentional about pushing the needle and making more families afford homes, and then also giving them opportunities such as having programs available for people to buy homes. And I know we'll talk a little bit about that, but if there's no more SPCP, then some of these lenders need to have their own down payment assistance programs. Provide it, help these families get into homes, make it a lot easier. So that's kind of where I would start with that, Laird.
Well, and I am going to, you picked up on one thing, and Tony, with ASIL, we help you with your social impact lending kind of, I'll let you discuss it, but I want to hear from you. I think that sometimes people don't hear the data because they don't know where it is and they don't know where they have gaps. What have you seen with ASIL? Is that sort of what you're seeing in that program when they kind of they look at the data for the first time and they're like, what, that can't be? Tell me what it's like.
I think, first of all, in our accredited social impact lender program, that's where we help lenders really develop that go-to-market comprehensive playbook. And, for example, I was on a call earlier this morning with a lender in the New England market, and we were going through their market scorecard, which iEmergent provides, and reviewing that just so happens. And one of the things that we help them uncover, though, Laird, is it all starts with the data. And the data tells us where there are opportunities. However, at the same time, even though this is a community bank in New England, we talked about there are multicultural markets and multicultural opportunities, not just within the first-time home buyers, but there were cohorts of high net affluent that could bode well for their jumbo markets. There happened to be opportunities when you look at from a doctor perspective, where this particular lender originated doctor loans. So how do we help position them from as part of this go-to-market strategy by using the data to say, here's where you're doing loans today, but here's where the growth and the opportunities are. And oh, by the way, it's just not one part of the market. Let's talk about serving all of that market. You know, when you look at these cohorts, whether they're Latino, whether they're African-American, whether they're LGBTQ, whether they're Asian, you know, within each one of those cohorts, you have a first-time home buyer, a move up, and that high net affluent aspirational buyer. And that's where I think lenders are missing the opportunity, is they're looking at and thinking about multicultural lending, you know, down payment assistance, et cetera, as just one and the only source of opportunities to grow originations for their platform, irrespective if they're a bank, credit union, or an IMB.
Absolutely. And, you know, you talk about that comparison piece, like we were talking about, quantify, compare. Tom and Nikki, I know both of your organizations, and one of the things that I think is not challenging, is a huge strength. Very rarely do either of you ever look and compare yourself to your peers. You compare yourself to your markets. Tom, why don't you tell me what you mean by that? How that helps and what that actually means?
So I think it's like anything else. We compare ourselves to our markets, but we also just compare ourselves to what we feel is what should be successful. You know, we look at what we do every day as something that can really make an impact. And with the lender hesitation comment, I'm just going to make these three reasonings that I've seen in the industry. I've seen it's because of delinquency, portfolio lending needs, and profitability. The problem is that's the short game, and we need to look at the long game here. So I look at it very simple. If you become subject matter experts within the saleable production, you can get those deals closed. If you are creative with your portfolio solutions and listen to the markets that you serve, you can provide a diverse solution. And then the other part of it is, you know, you have to show the value to your team of what they're doing and enabling them to see the base of being able to help these customers. It's basically what I would call the long game approach. The lenders that are afraid of it want to just write a check, or they think it's going to cost a lot of money to build out a team. The idea and the strategy, I'll just give you my commentary on this, is make it a cultural move. You may have some community lenders that work in specific markets, but make it an entire team effort. So instead of thinking of it like you have from a profitability standpoint, you have to build out 7 team members in Columbus or 6 team members in Pittsburgh to meet those goals. Look at what you have today, build a chassis of product suite, and then deliver it to your team, show the value prop, and then you create the long game and the success. And then you can build that out over even a 3-year duration and see how much profitability you gain from just by doing the right things in the communities that you serve. So we measure ourselves. We measure quarterly growth, annual growth, and we want to be leaders in this part of the industry and in equitable lending, because we see that as a long game of growing our volume and creating more loan officer potential as well.
Hey, Laird.
Go ahead.
I just wanted to touch on one point that I think is very critical for listeners and those who are attending to really walk away with. I spoke about this yesterday in Dallas at the TMBA, Texas MBA. One of the things that I talked to the audience about was, I said, the opportunity for us to serve this market and to increase home ownership in every community is going to take all of us, meaning a lot of times origination teams or lenders, whether you're a bank, a credit union, or an IMB, specifically think that you're just going out finding a couple of folks who are focused on that market, do a lot of business with the state or local HFAs, And in actuality, it is going to take training your entire sales staff, both who are minorities and non-minorities, to understand the nuances and how to connect and engage and really communicate with this multicultural market. Because quite honestly, the truth be told, we do not have, and we will not have over the next 3 years, enough loan officers who are female, who are Black, who are brown, who are Asian, or who are Latino that will actually be able to help serve that $2.6 trillion opportunity.
And that's a perfect segue into what I was going to ask Nikki something, but I'm going to ask her something else. But first, I'm going to ask John and then Nikki. John, you talked a lot yesterday or in our call about that, internal communication. That one of the challenges. Talk to us a little bit about how important it's been to talk to your team and explain to them, how to get everyone on board, kind of. Like, give us some insight into what's worked.
Yeah, I was doing a kind of a recap to some senior management and leadership at our credit union. And I was talking about some of the products and programs that, we have instituted. And we've got different executives from different parts of the organizations. They were like, well, why don't my employees know about it? Sometimes, you work for a big organization, you work in silos, and you're like, well, how come servicing doesn't know about this program? How come, certain areas, credit cards, servicing, they don't know about it or something. So they were like, hey, you need to get in front of all the groups, all the different areas within the credit union, and tell them about what we are offering in the community. What are our products and programs and such like that? Why is, we need to make sure that all 1,500 or plus employees that, our credit union know about it. Then all of a sudden, it's like opportunities start rising. If it's a family member or even themselves that qualify for certain products and programs that we're putting out there. It has been amazing that we've got coworkers and we've got family members of workers are embracing on this, and it just becomes a snowball effect of the word is out. And I think that was one, important thing. I'm still, I still haven't reached all of the areas too, but the ones I've reached, it just kind of snowballs into not only opportunities for lending, but opportunities for community events, opportunities for an employee that had a connection of a nonprofit organization that specialized in housing that I didn't know about that was in this community. And all of a sudden that opens up that door to talk about our products and program to that nonprofit that has an outlet to the community. So the more you get the communication out there to everyone, and I think it starts with your home base. Sometimes, when you work for organizations, you're in those silos and you kind of just stay in your lane and you don't really, you punch the clock. And the more you know about it, the more we can get the message out. And it starts with your home base. And we can get that out. It's a snowball effect for everyone. And I think what's been great about that is you talked about a few slides later, the communication and the leadership. Our senior leadership has really, all the way up to the board level, have really embraced an opportunity. And that's the key to it. Communicating what you do and really having a leadership support behind it. Because if you don't have that, then you're kind of still working your silo and your numbers are going to reflect that.
And you bring up a good point. This little, I guess it's a circle? It's a circle, but it's a puzzle piece circle, a cycle. None of those work without the other. I can tell you that's the biggest, when I asked you guys, what do you think is the reason people don't listen? I think they listen. I think they aren't successful because they don't think about all of those pieces, and all of you do. And so, Nikki, I'm going to jump to you because John touched on the leadership issue. As we start talking about this circle, we used to put outreach and education, community outreach that was the last thing we talked about. I don't think it should be. And I think we're learning that. And so you've done a lot with Fifth Third. I mean, I think of that event. You had Jay Plum was there. You had L. Lowe's there. You had, your head of, you had your managers from Columbus. You had your head of retail there. you do so much work in the communities with Avondale. What are some best practices and thoughts on, that leadership piece and the community outreach piece that you need us to know?
Yeah, I want to back up a little bit, Laird, and kind of dive into that, starting with what the original question was, which was, why don't you think lenders jump into this work? And I think just from listening to everybody, I think it's complex, and I think there's so much data, and just showing the opportunity at a macro level doesn't really show people how to impact at that micro level. I think the other thing is the expectation of when people expect to see the change, when, like, what's that runway when we're going to start to see this money come in and the opportunity is there. And I think just adjusting expectations on what to expect from this space and how you need to ensure that you've got solutions that meet the emerging needs of communities. First off, so I think it's a lot for organizations to digest and then take it and do something with it. And what I've seen is, and this ties into your second question and where John was going, there are certain groups and areas that own some of this work or are responsible for this work, but it's not a shared responsibility. And that's a cultural thing. That's a culture of where you're at. To John's point, you got to start at home, right? And that really does start with the head of the house. So if your executive leadership team is not committed to this space, it's pretty simple. You're not going to have funding to do the things that you need to do, right? You're not going to be able to have down payment assistance programs. You're not going to have the staffing and the focus that you need. And so I think that first and foremost, it does have to come from the head. They have to express the mission, and then you have to have leaders all throughout your organization, not just in your volunteerism groups or your community impact teams. You've got to have people from the lines of business that have ownership in this space. You've got to have product managers that understand unique challenges of the communities that we're trying to serve. You've got to your point, you've got to have retail there, MLOs there. When our MLOs are at an event on a Saturday and they see the head of the consumer bank there, that shows them this is real. We're all showing up for the community. We all do our part. And so I think it's providing opportunities as well. One thing that I like to do is, there's activities that you can do and you can serve alongside of your partners. But there's also opportunities to show up and learn more about the markets. And one thing I like to do is invite some of those leaders that might not often be on this side. So if you're the head of product or you're the head of underwriting, oftentimes you're within the four walls of the bank driving your business. And so making sure that you're inviting and having people from the organization join those opportunities that you might not normally think would be in those settings. When they come back into the four walls of the bank, they think about what they heard. They now start to recognize people in the community from one event to the other. There becomes a vested interest in ownership when you start to invite people in. And really, this is the fun stuff. It's the data that tells us where to go, and it's the stories to tell us to keep going. When you start sharing these stories of impact, you really start to see your culture shift and people raise their hands to say, how can I get involved? I might be in servicing, but do you have anything that I can get involved in? Let me know.
Right, absolutely. And the leadership piece is huge. And I look at this group and I know that you're all blessed with some leaders that are really strong in that respect. And I think we could have a whole webinar on how do you convince your leadership that it's important, but I can tell you how you do that. It's with dollars. It's with dollars and planning and talking about how using your resources efficiently allows you to be profitable, right? And that goes back to that planning piece. But again, before we move on, Nikki, you guys, the work you've done in Avondale specifically, I think about, you've taught me a lot about what's the best practice, like when you go into a community, like what works, what doesn't, and what did you find out about their ability to do to work on the solutions that going in you thought would be the solutions they needed?
Yeah, so I think in general, our first approach in any neighborhood that we go into is understanding from a data perspective what the gap is and who the partner is that is there to fill the gap, right? So who is that partner? Is it a CDC? Is it a CDFI? Is it a housing counselor? Who is that partner and what gap are they trying to fill? And then how can we best partner to support the gap they're trying to fill? And in this Avondale example, and the partner we were working with, they were really focused on homeownership training, homeownership training, homeownership training. And by doing a deeper community needs assessment and not just understanding the forecast and purchase activity and denial reasons and things from just a mortgage lens, but understanding the makeup of that community, the median income, of course the homeownership rates, but what's the educational attainment? What are the different job industries and where are these people working in that community? What we learned was that's actually not where you need to focus. Also looking at the developments that were happening in and around. Do those developments fit the need and what your community can attain? They don't. You got to actually, in this neighborhood, we got to focus on uplifting the community and mobilization and access to education and workforce development and other things. So what we learned in that scenario was we can support you with this thing that you need, but really, community partner, you need to be looking at this and this as well. So thank you for being a part of that, Laird, because I think that was a really good example of how you take the subject matter expertise, you take the data and the tools that a community partner like that otherwise doesn't have access to, and you help guide them with the data on how they fill gaps for the community, not just what they think they need, but what the data tells us they need.
Well, and that what's interesting about that, and it talks to what John was talking about how they were able to still do their SCCP. Avondale's not a state, it's not a county, it's a tiny little market. Like, look over here. And we went down to that level of detail because that's a level of detail you need to have to really understand the market. What's hard about that's hyper local. It's really hard to scale hyper local. Really hard. I can tell you, like, you can do, I have the privilege of working in Memphis and Philadelphia, Columbus, and now in Seattle. All 4 of those initiatives are completely different with different problems. And that's still like at a metro level, you're talking neighborhood level. But because we know things about the neighborhood, that is how, John, you can tell us, how are you able to still connect with the people you wanted to connect with through the SBCP without having to have that language? And that's what you did that was so well. I mean, it was perfect use of data.
Yeah, it's, as I said before, even though we might have changed some words, we didn't change the mission. So we've got to still be reflective of the neighborhoods we want to impact. Because you could say you have it and you remove certain wording components of it, but you're still working in the neighborhood. You're still working in those neighborhoods you want to impact. You still got the data of the neighborhoods you want to impact. And I think that's the most important part of that mission. Is don't lose focus on it, even though the environment is loud in certain spaces. Don't lose the thought of your mission. It's fostering that homeownership, that pathway to homeownership. It's using all the tools in your toolbox you got. As long as you're in front of that community and you're educating the community and you're sincere in that community, and you're showing up on a Saturday to do certain things, then you're still making that impact. You're still targeting that opportunity, and you're still going to get to the finish line of what your mission is. I always say that as myself being white gentleman, I might be the only person that looks like me in a group, and right away I get questions. And one of them is, why are you doing this? Why are you here in my community? So everyone needs to make sure they know that answer of your why when you're trying to impact the community. You've got to have that passion, you got to have the knowledge, and you got to have the sincerity of why you're there. If you don't, you're not going to make an impact. I think that's that's part of that. Maybe I'm segueing into the next part for you, Laird, a little bit. But that's part of the hiring process as well, and that's what we've tried to do as well. But people that look like the opportunity we want to capture is definitely one bridge to that community. But you better know your stuff when you get there. You better know your stuff, and you better be sincere and passionate. Tay kind of talked a lot about that initially too. He only hires people with passion that get it, and that's the number one opportunity that you've got to make sure you fill.
Well, and we got to go back to all of this. And this is what I'm talking about. It's all connected, right? But one of the pieces I want to show is this idea of gaps in coverage. So on the map right now, this is actually, we were working with Boeing. And when you're looking at the opportunity, so just imagine like the maps are about, that's where hotspots are, opportunity. You look at where the opportunities are, you look at where you are. And if you see that the hotspots and you don't match, you have a gap in coverage. And that could be opportunity, it could geographic, origination, whatever that means. It can be having the wrong products. But the point is when you see that, you don't necessarily see it here, you see it, oh, we lost share in Seattle. Oh, I wonder why. You dig down, you go deeper. That's where you start to focus. But then once you got to that point, that's when we come to this area of what are you going to do? Like, this is how you find the communities that you might need to drill into, because you can't do all of this in every community, right? You don't have the resources. And so I just wanted to make sure that when we're thinking about all these strategies, we're always thinking of them in the context of the opportunity in the whole. But I do want, because we're going to talk about hiring, but guess what we talk about after hiring and recruiting in your team? We have to talk about programs, which Gabe's going to help us a lot on, because back to that, if you have all of the pieces, it doesn't work. So Tay, why don't you come and build a little bit on John. After that, we're going to listen to the amazing things that FCB has done with, First Commonwealth has done with the way they use social media. But we also have to hear of some product stuff, because it's all connected, everybody. That's the part that's complicated. So Tay, you have so much experience with the recruiting piece. What do you think?
I really think it's all about the culture of your organization at the end of the day. We've all worked for that dude that's at the bank, that's been at the bank for 30 something years. He hired all his buddies. All his buddies have VP titles in the bank, and then everything looks the same. The culture never changes. You have to have a servant culture if you're wanting to serve the communities, no matter what. It doesn't matter if you're selling bank products or if you're selling mortgages or whatever. You have to be a servant leader. And when you're helping people when you're talking about a demographic gap here, when you're helping people, obviously the gap's there because most of the folks don't know what to do. You showed a slide earlier where there's 15 million people that qualify for a mortgage and they probably don't even know it. You got to have a culture of folks out there that's out there trying to target those folks and want to target those folks, because you can't always be getting the low-hanging fruit. Refi boom comes, yeah, everybody's dialing for dollars and calling the people that had 6+% interest rates. But in a steady market like we're in right now, the low-hanging fruit, it's going to be hard to get. You're going to have to find good quality loan officers who want to take the activities and you hold them accountable. But at the same time, the leaders have to be held accountable too for teaching the folks on what to do and how to do it. And, when I've worked all over the country and help people, we rinse and repeat those activities everywhere. I have folks that live in Washington State. They're doing the exact same things as my folks that are doing in Atlanta. And if you're doing that and you're holding people accountable, you build a different culture than anything that's been out there in the past. And then you start really seeing movement. You start seeing people being very comfortable being uncomfortable. John had said something in our planning meeting last week, that he would be the only white guy in some of these organizations or in some of these communities, and they're looking at him funny. Well, guess what? If John wasn't comfortable in his own skin, John probably wouldn't show up again next month to help these people. So when you're hiring into a culture, you hire people that are comfortable being in their own skin, but having that servant's heart, and they're going to go help as many people as they can. And then this is not even a topic anymore, Laird, because it goes back to what I said in the very beginning. We're trying to help every single person that names come across our desk. And you rinse and repeat it. If all of us are out there doing it, we're really going to make a headway in this. And then when it comes down to the products themselves, you have to educate the people that you bring in on what's available for your institution. And then you also have to be willing to say, I can't do that loan, but I know somebody over here at this credit union that I work with, that I partner with. So you had mentioned it earlier, collaborating. We can't be selfish to think if I can't do it, it can't be done. We have to be thinking collaboratively, saying, if I can't do it, but I have my friend Nikki over here at Fifth Third that might have something for you, and being willing to pass that puck on to someone else. And that's what it's all about.
Absolutely. And you talk about that collaboration, and it brings up, we have both Gabe and Tony here are fantastic resources for lenders. Gabe, I'd love for you to talk a little bit about equity DPA and where you're kind of going with things, how that can help on a product perspective, but also just a little bit about what HCA does, because I think you guys are fantastic resources, especially for organizations that don't have experience in this space.
Sure. I mean, there's a little bit of overlap in this, but our Climb program has long worked with lenders to with its community lending initiatives and mortgage banking to basically have the products, the strategies, and the partnerships and a plan that we document and write as well, put into writing. And essentially we facilitate that planning process with lending executives. And so we've done that with a bunch of lenders. And we use that same capacity and skill set to facilitate a lot of SPCPs, because we're the folks who wrote the toolkit, the original toolkit on that for MBA and NAFA. And you mentioned the product side. At the same time that we made the toolkit for first mortgages, knowing that we were opening up the door for variances for IMBs, for instance, to be able to provide down payment assistance, which was groundbreaking, because by and large that doesn't happen. And so, that was a big deal. And to do it for anyone above 80% AMI, right? So doing it non-low income based, right, was another huge groundbreaker there. We at that same time said, why don't we also make a solution for down payment assistance that solves for the problem statements that we see and agree with in the space, and how DPA is accessed, how it can be deployed efficiently, when it gets used, who it gets used for, and who's able to deploy it, and with what products. And so that really has been a big, I would say, not just a pivot. We did a 2-year pilot with the DPA program, and we wanted to prove that we could make this a national scalable program. We recently won some awards for it from Brookings and others. But that solution is exploding now in a way, because it is an alternative when you can't get a variance for as a lender, when you've got a saleable product, for instance, when you want to have down payment assistance with an FHA, first mortgage. Even banks that have essentially banks are written into the seller guide for both GSEs and don't require a variance to have their own down payment assistance along with a GSE loan. IMBs would require a variance, and of course all the SPCPs that require variances. And so now we're kind of down to a small low income toolkit. It's really important that we built these DPA solutions. So what we did, just to tell you briefly about that, is that we have products that can be deployed anywhere. We have both a grant and a loan product. The grant product is a smaller amount of money, and the loan product is a larger amount of money. So it depends on the donor, lender, and their level of engagement. But we opened that up, the program, to be a third-party program. There's some specialty things that means. That means that we can go alongside an FHA mortgage. So our grant program qualifies as a qualifying funding source for a buyer with an FHA loan. That's a big deal for banks and IMBs. They also make more money on those transactions and oftentimes see declinations for something like cash to close or for DTI, and the DPA can help there. That third party status, the other thing that's really important there is that when you have your own money to spend internally on an internal program, you have to offer it to every single person who qualifies. And that means that you will have a large percentage of borrowers who had their own cash to qualify and could have closed their transaction without that assistance. When you've got a partner program like ours in your back pocket, you can pull it out only when it's needed. So we're really endeavoring with our lender partners and on behalf of donors to make sure that these precious dollars are helping someone who was about to be declined, and because there was 159,000 that were declined just because of cash to close, right? Purchase transactions. 8 out of 10 of those home buyers were either low income or BIPOC. And so this program can apply to low-income census tracts, low-income people, BIPOC people, MMCT areas. It's very wide, goes up to 140% AMI, one of the biggest lessons we learned from SPCPs to overcome that gap for first-generation home buyers. And it has a direct ROI and a direct allocation methodology for lenders. And so that's the solution that, and you know, if folks want more information, they should check out our website, watch the videos, and attend one of our upcoming webinars on the National DPA solutions.
Tony, before I get into MMOD, what I want you to talk about a little bit, Tom Sullivan. Never in my life have I recommended to more clients that they visit your social media page. The reason I like it so much, you know, it's not just yours, it's you, it's Joe, Tomaseski, it's every single person in your organization. What you choose to post is what you're really doing. But I don't really know what it is. I'd love to have you, it's so authentic, it's so appreciative, empowering to the people that you're working with. You talked in your response with me about celebrating successes. How long did it take? I mean, how did you guys get there? It's so good.
Yeah, so I will say this, it's what we've been talking about. It's getting everyone buying in together that it's a cultural way of doing business. So the whole idea is to tell the story of the successes, but put the credit on the customer helping get to the closing table, to the organizations that enable us to get these customers buying a home, to really just lifting up all of those that we may have served, but they had to do the lifting to get there. It's collaborating with the bank partners, which Nikki mentioned, having them involved in the social media outlook. So the community see that we're a bank that's driving one mission, and that is the home ownership aspect. And we're doing it, you know, just on a natural level. I think it's just showing the markets that we're present. And that means me, that means our loan officers, that means the whole entire organization pulling together. I've had the head of retail as well on some of the posts, and it's just to show that we really do believe in what this is. And, you know, equitable lending is a part of our bloodline. It's, you know, targeting the LMI listings and the CRA listings in the markets and lifting up those realtors that are doing that powerful work and talking about how they go above and beyond. It's just the cultural opening the door, having it more than a few. It's having the whole group doing it, posting it, and just telling really good stories about home buyers that, you know, never thought they'd have that home. A 62-year-old Black woman that got her first set of keys in her family. And it was a beautiful story. This stuff just, it touches you. I mean, it just makes you feel like you're really doing something to help. And again, it's just become a natural effort. And I think it's, you know, not to sound corny or anything, but the team's touched by it and our organization's touched by it. And the head of our entire bank sees these results, and you have to have the buy-in. You can have the buy-in from me, who's the head of mortgage, but it's our bank too. It's our entire culture and who we are. And that's what's enabled us to really have that social media attack, because it's a joint and collaborative effort across the board in our organization.
Gosh, all you guys remind me of everything you're talking about. I just think of something each one of you has said. So, we have in the key takeaways, Nikki, you're going to have to talk about one of my favorites from your toolbox. But Tony, MMOD, how, not everybody has the ability to do that. Tell us about MMOD.
Yeah, absolutely, Laird. And first of all, on your screen, you have this circle that I'm actually going to give it a new name. It's really the circle of cash flow. When at NAMMBA with our ASA program, so the accredited social impact lender, what we do is we come in and work with lenders, banks, credit unions, IMBs, and all of the pieces that you see together here that fit and come together to serve more of what we call the multicultural market. So we work with programs and products. We look at from the human capital, what's your playbook in terms of how to recruit more, but also how to train the ones that you do have who are non-minority on how to serve this market. Who are those external and internal stakeholders that need to be engaged and educated about the opportunity from a business perspective? And then last but not least, looking at it from I call it the sales plays. What are you going to do? What are your sales teams? What are your leaders going to do on a day-to-day, weekly and monthly basis to generate leads and to begin to serve more of these communities? A large part of where every lender has an opportunity right now is to pivot their school of thought in terms of selling product, selling programs, selling rates, selling closing dates, to really focusing on education. And I always say that the customer of yesterday is not your customer today. Your customer today is young, they're multilingual, they're technology savvy, which, by the way, most of your loan officers aren't. And so in order to get to the customer today, you've got to understand, you've got to build a top of the funnel that is focused on providing education content, helping to drop knowledge, nuggets as we call them, about the ability and benefits of owning a home. And so that's what multicultural marketing on demand does. We call it MMOD. It essentially helps banks, credit unions, and IMBs, their marketing teams, who many companies have had to cut back on their marketing teams. So they don't have the time, they don't have the resource or the expertise to create this content. We have over 1,700 pieces of content that's already in a library that you can focus on, whether it's single females, whether it's mixed race couples, whether it's LGBTQ, whether it's millennials, whether it is Asian, Latino, African-American, and Spanish as well. And the whole goal is to make it easy for companies to educate, connect, and engage the consumer, so they raise their hand and say, I want to do business with you. And certainly if anyone wants to learn more, they can just go to NAMMBA.org or Cultural Outreach to learn more about MMOD.
Wow. Well, you guys, it's about 1:37. I said we may not get to 1:30. I should have known. I should have known where we're coming from. There's so much to talk about. I'd love to kind of go back to those, so let's revisit here. We talked about outreach and education. We talked about, partners, and we didn't even get into how do we engage better and become trusted advisors with real estate agents. And we can certainly, if no one has any questions, we can go into that, because the data can be incredibly helpful for that. But also keep in mind that in the spirit of innovation, real estate agents are really important. And I've seen them, like I think of Columbus, Nikki and Tom, and I've seen how like Kiana and Dawn and all of the different LOs and agents that are committed to this space, how they help each other grow their business. But one of the challenges, Tony, and we've talked about this, there's a lot of not everyone is going, if you're mortgage ready and you don't know it, you don't have a real estate agent. You don't. And so we have to look at other ways to reach people. And so things like, whether it's in the community to get to know the community, but there's also, there's hospitals and schools and libraries and community nonprofits, and the list goes on and on with the type of organizations with whom you can engage to do to partner, builders. You know, it really is anybody who has a thought on and a role in the home ownership journey or a healthy community. That's who we are, who you can and should be thinking about potentially partnering with. And there is no, you know, there's lunch and learns, there's, you know, joint, you know, signing a pledge to do a certain thing. All of those things work. But what I've seen from communities that have been marginalized, communities where there's been a major trust or education gap, when you are the lender or the professional who works with, you know, a person for the first time in a way they can trust, the loyalty is incredible. And you see that, you know, what might be challenging in the first 6 or 8 months, you see that come, you know, that come back to you in droves, even if you weren't looking for that. It is a great way, a great referral business to make it work that way. But I'd like to move on, because looks like we do maybe have a few things in the chat. But the last thing I want to talk about to you guys, and I paused my screen sharing there for a minute, is these key takeaways. Couple I'm going to say, you've heard me talk about dynamic data, anticipating opportunities, focusing on that home buyer journey. Bloom 614, you should visit that site. It's one of the best home buyer hubs I've ever seen. I got to credit iEmergent Columbus with that. But the point of it is to think about everything you're doing in the context of the home buyer journey. That collaboration, strength and sprint and a marathon. And we have, oh, it's not on here, Nikki. Tell us about it's not a family, not a file, because I love that.
Family, not a file. So yeah, I mean, it's kind of where Tom was going, and I, you know, all of us have touched on it. At the end of the day, it's really about, well, first off, when Tom was talking, I just always have this overwhelming feeling of like, isn't this cool? Like, I've done a lot of different roles in the mortgage industry, and to really understand how housing is just the intersect of you know, financial freedom and community and all of that. Like, it really is cool to be able to impact and change and be a part of a change. So the best way to show that is through storytelling, right? It's awesome to show it in numbers. Yes, so awesome, but not everybody cares about that. So it's storytelling, and we have this thing at Fifth Third, it's called Family, Not a File, where we share the stories similar to Tom of the families' lives who've been impacted and what their journey through homeownership was. And it doesn't just have to be in the affordable space. It doesn't have to, right? We've got families at all varying stages of their lives. Some are retiring and downsizing. Some are first-time home buyers. Some have been working on it, you know, for 18 months plus and are just becoming a home buyer. Others are refinancing. Some are moving. But it's really sharing what are the stories of the lives of the people in the communities that we're impacting. And Tom, similar to you, this is something we share broadly. My favorite thing to do is to make Jay Plum cry. And this is something that gets this guy every time. Sharing a Family, Not a File with him and getting him sentimental in front of all of our teams is really fun to do. But it's also fun to just see how people connect to the work. And it makes work just that much more fun, right? It does for me, at least.
Well, and I have to go. I told you I have some quotes. Nikki, this is the one that makes me think of all of you guys. A friend of mine shared this at a time I needed to. This is part, I do not credit for this quote. But this is part of what we look at. One of the things that's great about this is that we get to do this good work with good people. That's something to celebrate. You know, these are complex, chaotic times, but that possibility, the things that we can potentially do together, you know, that brings about a lot of joy. So thank you for kind of giving me the opportunity to show that. We're going to provide this deck, and there's more information. There's some examples of how the data can be used, some of the stuff we talked about. But again, I still think that the best part of this is hearing the passion and the you know, the understanding that's in each of your voices. So why don't, you know, again, still have time for questions, but why don't each of you tell me what's a parting thought you have? I'll put another parting thought on the screen that people can read at their leisure. But first, let's do Tom. Parting thoughts.
Parting thought is this. This type of work is just a beautiful thing. And we've to turn this into a way to generate new relationships, to do the right things in our communities. And doing the right things will ultimately enable us to close more loans and just feel good about it. So we can help twofold: the banks and our employers, but also the communities. I mean, it's about lifting up our communities. It's about engaging in what matters, and that's our communities that we serve, and just being present in our efforts. As leaders, we need to be just as invested as we say. We can't tell them to do it. We have to live it as well. So that's my closing comments.
Okay, I'm going to pick on John.
I can't echo Tom's more than that too, because you've got to have the passion in this space. You know, I've been doing this for over 30 years in the mortgage business, and I will tell you the last 2 years in this role have probably been the most satisfying of my career. And if you're not surrounding yourself with people that believe in that mission and can feel your passion and have that same passion, then that's too bad. But I'm fortunate enough to have that, and I'm grateful enough that I have leadership that supports my initiatives as well. So get the support from leadership. Have passionate people that work in love in this work in this space, and be emotional when you're looking at family not files or crash my closings and such like that. Talk about a grown man getting emotional. Nikki, you should come listen to me when I watch this one video. I've watched it 15 times and I get emotional every time. Have that passion, have that emotion, and your life will be gratifying.
Gabe.
Well, speaking of videos to make you cry, go on to the National TPA page and watch the Jose video. Particularly makes people cry. The Realtor.com did a great job producing those videos, but Jose talks about his daughter being his inspiration and asking him about, are they closing on the home, and are they closing on the home, and so anyway, it just is it's a great home ownership story. Both of them are first generation home buyers, and they're very inspiring. And I guess I would end it on two things. One thing, just sort of big picture of, inspiration and passion, is that you're all the dream makers. This home ownership is the core of the American dream. It's the core of American values. And it is what fuels small business, which is the other source of wealth for Americans. And so this is just the most important thing. I am someone who was called to this work because I have a psych degree. I was almost a therapist, but Maslow's hierarchy of needs will show you that housing and home is more important than some of the psychological aspects. And so I was called to housing and home. And what we're doing here is that baseline. It's a baseline for communities. It's a baseline for families, and it's so worthy, this work. So anyway, feel good about that, and keep working on that. And the other thing on diversity, 77% of household formation, I should say, will be driven by BIPOC households, and that's between now and the end of the decade. And so household formation is really what drives home purchase, right? And home purchase is really what drives this business. It's what expands the market. It's what lifts the business. It is the rising tide that raises all ships. And so, you've got, and you can already see, look at that Laird data charts, the reduction in applications from non-Hispanic white, just to see where the business is shifting. So, you can do this for the social reasons, but you had better do it for the business reasons, because if not, you, like Tony said, I think earlier, you probably won't be around at the end of the decade. Someone will have gobbled up whatever remains of you. If you don't do this business. And so, those are the two, that's the carrot and the stick of it all. But stay at it, and we're certainly here to help as well.
Lynette, you just hit on that piece of, we didn't really talk about the bottom line, except we did, because this passion is how you get there. I'm gonna let Tony Thompson take it next.
Well, hey, Laird, I would just say to everyone in the audience right now, we know that there's a lot of noise going on in our industry. And what I advise and certainly want to encourage is to stay focused on the why. And at the end of the day, we're mortgage bankers, and we're here, and our mission and our purpose and our passion is to help create the dream and help deliver the dream of home ownership to every community. Keywords, every community in America. And so if lenders take that approach and understand that they can do good, which is make a difference in the communities that they live and work in while doing good, and make money at the same time, then I think if they take that philosophy and that principle of doing good by doing good, then they will see the next several years as a great opportunity to not only impact their company's bottom line, impact their employees, and also impact the communities in which they live and serve.
Hey, Nikki.
All right. Well, listen, they all gave like a lot of ditto to everything they said. I would just say to, any of you, if you are in this work and you are feeling discouraged by what has happened over the last 4 months, or, whatever it is, if it's okay that you also are going through an emotional journey into what Tony was saying. My big focus has been focus on what you can control. And there is so much we still can do with what we have. So, and I also love what John said. If you don't have a community of people around you, John will be giving out his cell phone number, so feel free to call him. But no, if you don't have a community of people around you, make sure that you're really filling your cup, because you need all of that passion and that fire to keep going. So keep going.
Okay.
I mean, everyone's pretty much said everything that I was thinking, but I think with the noise that is out there, like Tony was saying, we always have to remain positive, because as leaders, our teams are only going to follow what they see as leaders. And we have to remain positive. We have to constantly provide opportunities for our teams to win. The bottom line is what it is. You're going to make money if you're helping people get into homes. That's what we do for a living. You're going to make money. You're going to help people get into houses. But if you don't have an environment like that, reach out to the panelists that are here. We are more than willing to talk about what the cultures that we've provided to our teams and bringing in more folks to that. I'm always recruiting, Laird, but I'm just saying, if you don't have this type of environment or leadership at your current companies, reach out to us, because this is what we have to do, is duplicate our efforts. Because if everyone is doing and talking and doing the things that we're doing here as a group of panelists, then obviously this mortgage business is going to be in safe hands going forward.
But so as you guys listen to them talk, you know why I picked this group. Okay. Yeah, what else can you say? I thought two ways to end this. I could end it with this last one, but I won't be able to keep my face. You can read it. I'm not going to try to say it. The other way I wanted to end this was with that tub thumping song. You get knocked down, you get up again. You get knocked down, then you get up again. I think it's what it's called. I thought about that because I think about, there's going to be things that keep hitting this industry. And about a week ago, I kind of had a little bit of a flip out on LinkedIn. Not a flip out, but I'm going to challenge anyone who comes and talks about only technology or only profitability, because the reality is, everyone, without homeowners, without households, we're nothing. This industry is about home ownership. So this focus is what we focused on from a business perspective and an operations perspective and everything else. And so, again, I think that there's a big community out there. It is absolutely a pleasure to work with these guys, of course, but all of you who took the time, there's 40 of you still on. That's a long time to sit and listen to us. Thank you. And I'm going to try. When a great ship is in harbor and moored, it is safe. There can be no doubt. But that is not what great ships are for. So thank you all for joining us. Any questions now? We have a little bit of time. I'm sure everybody would like to go, but reach out to any of us at all times. We'll be sending this deck out, and keep on keeping on.
You want me to sing? I get knocked down.
Yes,
but I
do
get
it,
up
you do
again.
it.
You ain't ever gonna. Thank you, Laird. Thank you, everyone.
Appreciate
thank
you.
you,
There
guys.
you go. There, opening act right there.
I know Nikki's pretty
Okay.
thinking too. She brings
Tony
music to their internal webinars.
Tony, the only other one we need to have is you doing your, all we do is win, win, win. So we'll have that. Nikki can do something. Next time we'll all come with a song. How's that sound?
There we go. There we go. We'll make it
All
happen.
right.
It was a great webinar, great content, great speakers, great session as well. So glad to
All right,
participate.
guys. Have a good rest of your day.
Take
All
care.
right, thanks, guys. Take care.
Bye.
Bye-bye.